right, good morning, folks. Welcome to the room. This is your room. Morning, Ron. Nice to see you. Swami. That's funny. Guys, great to see you. Let's get right into it, right? Hey, Jeffrey Dean, good to see you. Bob B, nice to have you. News check. I wasn't even loaded up. I'm not sure if anything happened, but at 8:30 a.m., guys, that high impact news, did it move the market? Did it shake it up a little bit? Every morning I come in and I check forexfactory.com. Nice bump on the ES. Cool. Just because, man, this stuff can set the market in motion. If you have a market that is dead, it may spike. It may change direction. It could be too fast to trade. And all of that kind of removes your advantage. And everything we do is about advantages. So each and every morning I come to forexfactory.com and I just look for red letter news or high impact news, guys. I don't know what a PPI is. I do know what unemployment claims are, but I don't really pay attention to them. Not making decisions on what the news is, but rather sidestepping the markets and staying out of the way if there is a big ugly reaction. And then we're just going to get right to it, guys. We're going to talk about the same thing we did yesterday. The same thing that we'll talk about tomorrow. The same thing that's going to be repeated probably indefinitely. And that's talking about a high probability trend trade. We're going to take a whole hour this morning to reinforce rules, to learn how to study it, to see examples of it, and then to review your charts. We talk about this high probability trend trade first for new users, for old users, for inconsistent users, for consistent users. Because this is a trade that typically wins 70 to 80% of the time. And it's an amazing trade because most traders have an aha moment after they try to find all the trades, when they realize that this is the only trade they need. This is a trade that creates an awful lot of confidence through the memory of success. And guys, this is a trade that teaches you to read your charts, and that's the goal, is to be able to look at your charts and say, I have this advantage. The market's going this way. That is a lot of momentum. That's something that could stop the market. And once you do that, once you learn how to take the information from the indicators, how to read them, you're going to realize that 90% of your day is just chart reading. 90% of your day is doing nothing. Sitting on your hands, waiting for the pattern to come to be so that you know that you have an edge when you take your trade. You know you have an advantage. The high probability trend trade rules are nothing more than a description of a pattern that has been proven to win more than it loses. And the cool thing is if you focus on chart reading, if you focus on being able to identify advantages, you're going to understand first where the market is likely to continue. This is going to be your entry for the highest probability trend trade. You're actually going to be able to pinpoint where the market is most likely to retrace, to bounce, and to continue with the underlying trend. You will begin to understand where the market is likely to go. This is going to help you with targets, using Fibonacci, using momentum. And then finally, you're going to realize where the market is likely to stop. This is what we call a termination condition. And a termination condition is just a big ugly line on a large chart that could ruin your good time. And you're going to be able to understand all of these concepts, guys. If you keep it simple in the beginning, if you keep it focused in the beginning, you'll be amazed how far you get in a short amount of time. The high probability trend trade is only 3 rules. That's it. I can't stress enough that simplicity tends to pay the most dividends. The fewest moving parts tends to be the easiest approach for most people. So you're getting the most basic, best of the best way to learn how to read your indicators, giving you a trade that gives you the potential to be profitable as you learn to get better at reading your indicators. So these 3 rules, each rule gives an advantage. When I have strong triggers, I have the advantage of momentum, which means that I have a market that is barreling through the world like a freight train, and momentum is difficult to stop. Once rule 2 is met and there's no termination conditions, I'm going to have a clear path. So I'm going to take all that momentum And there's nothing in the way to stop it, which is an amazing feeling. And it's such an amazing feeling that eventually I'll go to rule number 3, where I'm going to define my entry area. And guys, the entry area is specific to trend trades. So only 3 rules. 2 of these rules, being able to identify momentum, being able to identify a clear path, that is the core. That is the foundation. That's what you're going to build from. Because once you understand momentum and path, you have the skill set to create a plan that is consistent, that is profitable. And these 2 ideas of momentum and path are probably going to stick with you no matter what kind of trades you take. 3 rules, only 2 charts. That's it. Even just more simple, your first 2 rules can be identified with the first bar on your large chart. Your large chart is the 13.2, that's crude oil. That's the S&P. There's a reason that we've been teaching on these 2 for decades, because they tend to be the easiest to read for new users. The first bar on your large chart will define direction, momentum, and areas. It's a very broad stroke of a brush, guys. It's a slow moving chart. It's very difficult to see change on this chart. Your first 2 rules, rules 1 and 2, are met on the large chart, providing you the advantage of momentum, making sure that you have a clear path. Once those 2 rules are met and true, you will turn your attention to a small chart. This is a faster chart. And it refines that broad stroke of a brush. It really shows the inner workings of that 1 bar. It'll show little pushes down and pushes up and fluctuations and bounces, guys. And this refinement process is going to have you pinpointing your areas for entry. It's going to reduce risk for you. It will increase profit potential for you. And that's where rule number 3 comes in. And there's a lot of really smart traders that I've worked with that say they won't even look at a small chart until the large chart says it's time to look for an entry. We use these 2 charts because it's a great metaphor. Who am I trading with, or who am I trading against? Guys, the large chart, I want you to think of it. This is the large crowd. These are the people that move the market, that create momentum, that react at key areas. The large crowd typically wins, guys. More often than not, the large crowd wins. Your small chart is the small crowd, and these are the men and women that still have more money and influence than you ever will, and they create small retracements, tiny little fights against the large crowd, but they typically lose 70 to 80% of the time in their fight, whether it's intentional or not. And your rule number 3 on that smaller, faster chart is designed to pinpoint where their failure is most likely to occur. And that failure point is actually where the market is most likely to bounce and continue in the direction of the trend. So we're going to keep it real focused this morning. We're going to talk about the 3 rules. We're going to keep it on 2 charts. And we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. And it's okay to trade when your rules are met, because you have an advantage, you have an edge, you have a pattern that's been proven to win more than it loses, which means that it's not okay to trade if you choose to take this direction when the rules aren't met, because you don't have the advantage, you don't have the edge. It's not a pattern that's been proven to win more than it loses. So we're going to do this for an hour. We're going to look at these rules. I'm going to break them down individually. I'm going to give you tools to study them. And by the end of this first hour, you will have everything that you need to be successful with this software as a brand new user. You guys have the ability to simulate, to get in there and hopefully make some mistakes. And I know that sounds weird that the guy teaching the room would say, go make some mistakes. Guys, when you make mistakes, you learn how to avoid them. When you make mistakes, you learn how to fix them. And I think that all of us alpha males and females have this idea that a losing trade is a failure, but it's not. Sometimes a losing trade is just a cost of doing business. So what I really want you to do is I want you to post your trades in the room, every one of them, win or lose. Because if you get lucky on simulator, if you break all the rules and still make money, your brain says that you're a genius. And that's where people go live too soon. That's where people blow out accounts. It's a short-term victory, but it's very much a long-term failure. So post your pictures in the room. And even more importantly, when you post in the room, guys, do me this favor. Tell me why. Tell me why you took the trade. Tell me what your chart read was. Show me your entries. Show me your exits. Because when you do that, when you take the time to write the whys, hey, Lonnie, we'll go over that. Do me a favor. Go to your search bar and type in TechSmith. Because you have capture software on your chart. If you'll do me a favor and open it up, I'll go through the whole process for you. Thank you for asking that. Let me know when you're ready. I've got mine up. So guys, every time you post in the room, tell me why. Because what you're doing is when it's a great trade, when the rules are followed, when the advantages are there, you're literally creating a recipe for success. You're saying, this is my pattern, let me describe it, this is what I want to do every time because it wins more than it loses. Or when you talk about the whys, you're also telling me how you read your indicators. So if you need any help, if there's a lesson that needs to be presented, that needs to be revisited, that needs to be said differently, I know exactly what we need to do. And that's the first step to becoming a confident trader ASAP. You just need to know what you did right and wrong, and that's my job, guys, is to help you with that. We will simplify. I'll hand you a trade plan that has 2 trades on it. The first trade is the high probability trend trade, and that means that each indicator on every chart agrees with the rules for the trade. It also has a trade on it that's a medium probability trade, and guys, this is going to be most of your trades. A medium probability trade says that almost all your indicators agree on all your charts. However, a small issue exists, and you're going to use your chart reading to recognize the issue. And when you're looking for issues, one of these will be your issue. So you've got to learn these individual rules. It doesn't mean that there's no trade. It means that any trade taken will have to be managed a little more assertively, a little more aggressively. Your job is to understand what looks you'll commit to. Lonnie, did you get the TechSmith capture up? If not, I'll grab you the link and you could download it real quick. Hey guys, learning the looks you'll commit to, okay, no worries. So let's do this real quick. That gets into the second half of becoming a confident trader ASAP. And that's using this spreadsheet that I just brought up. And then there, Lonnie, whoops, hold on. I just gave you a picture of the link. That's not going to work for you. Guys, Nexgen gave you this software when you download. It's part of the downloading thing. And I just put the link in the room. So Lonnie, if you click on that, do the free download, it takes about 2 minutes, maybe 2 minutes. If you're not very tech savvy, you can get with Jason and he can help you out as well. Let me know when you have it. Or if you're struggling, let me know that you're struggling to the point to where you won't have it. But usually if you go to your search bar and you start typing in tech, it shows up. Guys, using the spreadsheet that I'm going to give you, the spreadsheet that I give you every day, that gets updated almost every day. Guys, this is the second step in becoming a confident trader ASAP, because the spreadsheet is going to use repetition to create recognition, to make these looks easy. And the spreadsheet has 4 tabs on it, guys. The first tab is the basic rules. And the basic rules are our momentum and path, guys. This is your foundation. So in the green, it shows you exactly what it looks like to have the rules met. The pictures that are in there are annotated to tell you exactly why the rules are met, what it means to you. And then the red section is where the rules are not met. Because if we're going to learn the patience to not trade when the rules aren't met, you need to know what it looks like when you're sitting in that 90% phase, when you're just waiting because your money's worth having the advantages. The second tab is the client trades. And the client trades are really just people in the room dropping in great pictures, saying, hey Mark, check out this perfect high probability trade. Check out this awesome medium probability trade. Look how I followed the rules and look how the results came out. And when they fit the rules, sometimes when they're not even a winner, but they fit the rules perfectly, guys, I'll take that picture, I'll drop it in here, and you can use it as a study guide. There's entry sequences for longs and shorts. There's the management section, guys. There's patterns that repeat themselves. And then you've got your own tab, Build Your Plan, where you can take your pictures, where you can really load these in as you recognize the patterns, you want to make them repeatable, as you learn to manage, as you begin to see things that jump off the page because you're now a chart reader. And that's where the trade tracking sheet comes in. The trade tracking sheet has a couple things over here, how to annotate for the best feedback. It has the instructions on how to paste into the spreadsheet. We'll do that together in just a second. But this is where you're going to input. Guys, this was my trade. These are my advantages. This was the feedback from class. And what you're going to do is every morning, if you really want to get to where you want to be, guys, people skip this because it feels like work. I'm telling you, this has been one of the most helpful tools in my journey, is to go back every morning and look at what you did yesterday. Ask yourself what worked. Ask yourself what didn't work. What made you feel relaxed? When were you confident, right? When did you get nervous and feel like you had to move stops? And what you're going to find is there's a very definite correlation between following rules and emotions kind of keeping in check, and then breaking rules and feeling like you've got to move stops quickly and you've got to change your targets, and it's almost fearful. And what happens is if you go through this routine every morning, it'll take you 3 or 4 minutes tops. You're going to look at the pictures, you're going to look at the advantages, you're going to look at the feedback, and it's going to set you up for the day. The things that you should be looking for, the things that you should be avoiding. And guys, that feedback section is where you're going to start to see the patterns in yourself. If you're making mistakes that are detrimental to your success, you're going to see it in here. Maybe it's termination conditions. And you're going to see that start to repeat itself. And you're going to say to yourself, oh my gosh, this is killing me. I have to stop this. And you're going to drop something in the room. Mark, how the heck do I avoid termination conditions? And we'll work on it together, because I'm telling you right now, that was my thing. That's most everybody's thing in the very beginning. Because not trading into termination conditions means that you have to be patient. And when you're patient, you're not in the market without advantages. So let's take a picture together. Lonnie, were you able to get it? Oh, well, shoot, Lonnie, you could have said that. It's even better. That's funny. I was reaching out to the client advisors. I was like, hey, somebody get Lonnie Capture software. No, Snagit's great, guys. They're the same tool. Snagit is capture with bells and whistles. So we'll do it on Snagit, Lonnie, so you know exactly what you're doing. And I'm going to bring up 2 charts real quick, and we're going to go through the process of getting the best feedback. So with Snagit up, once it's open on your computer, guys, you can actually hit print screen and it'll get you started, or you can click the giant capture button. And when you click it, if you only hover over one screen, one chart, it's only going to give you 1 chart's worth of information. So I need you guys to click and drag. Left click at the top left of your large chart, drag it down to the bottom of your small chart, and then release. You set a hotkey, Wayne? Right on. So Lonnie, once you're here, you've got arrows, so you can point to that and say, wow, that's a termination. You've got the call out, and this is the most important one. The call out is where you tell me why. Feel free to sing Boys to Men or whoever it was that sang that. And then to get it into the room, Lonnie, there's two ways you can do it. The first way is you can right click and just hit copy. And then come over to the room, and if you're in the pop out, you have to hit Control V, and that'll post your picture right in the room. The other thing you can do, and I've got mine set to default to screencast, is you can click share your captures to screencast. And what that's going to do is that's going to give you a link where you can click share. And it's going to give you that screencast.com and a bunch of letters. And the same thing is you can post that right in the room. So if you want to give it a practice run, take a picture of whatever. It can be of your dog. I like it when you guys send me pictures of your dogs. And then once you have it, these are the instructions for putting into the spreadsheet, but let's go through it real quick. I've got that screencast link, and if I paste it in, it's app screencast.com, letters, blah, blah, blah. It's difficult to go back and study things like that. So I'm going to highlight it, and I'm going to go to the Insert tab. And from the Insert tab, I'm going to click Link, and we're going to turn that address into a hyperlink. Oh, that's perfect. Absolutely perfect, Lonnie. That's it. Now you know. I love it. 2 charts. Beautiful. I'm going to repost the address, the screencast address, into the address bar like you're going to Google or eBay or something. And up here, you might put perfect short or losing long or heck, I don't know. Whatever. But now it describes what's going on in the picture, and when you come back tomorrow, you can go, well, let me look at this loser. And what went wrong with this loser? Oh my gosh, I traded into a termination condition. I'm going to try to avoid that today. So good stuff. I'm glad you got there quick. So guys, we're going to do all of this morning. We're going to talk about the rules. You're going to simulate, you're going to practice, you're going to throw them in the room. We're going to talk about everything you did. And I'm not going to be judgy McJudgerson. I am going to look at your trades. We're going to talk about your chart read, the whys that you did what you did. And we're going to celebrate everything amazing. And we're going to try to correct challenges or point out challenges. And that's all it is, guys. My job is to teach you how to read indicators. It's not to tell you when to take trades or how to be a trader. You're going to be able to make good decisions based on your ability reading the charts, reading the indicators. So let's talk about what the indicators are. Both charts have triggers, small and large. This is all you need to know. Small triggers are 2 solid lines that work together. Large triggers are 2 dashed lines that work together to create the large triggers. So small and large, when they're going up, they're green. Small and large, when they're going down, they're red. That's as technical as you need to be with these things. Every chart has areas, large and small. And Lonnie, when I go through in the second half of class, we're going to go through all the pictures posted in order. If you ever need immediate feedback, guys, if you got to go somewhere, let me know. I'll look at it, but I love to go through the rules before we look at the charts because every chart goes back to momentum, path, and entry. Guys, both large and small charts have areas. Divergence highs, divergence lows, Fibonacci resistance, Fibonacci support, yellow 1-to-1s, midband. You don't need to know how they came to be. You don't need to know any of the inputs. You don't have to know the technical side. Just know their names. And on a large chart, they're going to define trouble. And on a small chart, they're going to define entries. So it depends on which chart you're looking at. Same thing with the trigger lines. On a large chart, they're going to define momentum. Actually, on both charts, they'll define momentum. They'll also define termination conditions, and they're also used to define entries. So you don't have to know anything other than what they are, and then the rules will talk you through how to use them. So we're going to break it down. We're going to go through the rules. The large chart needs strong triggers. The large chart leads the way, guys. The large chart will define trend, momentum, areas, and rule number 1 says that it has to have strong triggers. And the only way to have strong triggers is if you're trading with the trend. The only way you can have the advantage of momentum is if you're trading with the trend. So let's do that lesson real quick. If the background on your large chart behind that first bar is green, it's going up. And if it's going up, your job is to look for rules for high probability trend trade longs to go up with it. If it's red, it's down, and you're looking for rules to be met to go down with it. Guys, it's pretty simple. The trend is your friend. That has been a staple in trading for probably hundreds of years. In order to have strong triggers in an uptrend, both small and large triggers must be green. If they're not, rule number 1 isn't met. In a downtrend, both the small and large triggers must be red. If they're not, you don't have strong triggers. So strong triggers means that your small triggers have broken above and away from the large triggers. There's space between the two. I want you to picture scissors that are opened up wide, ready to cut. And when I have that separation between the small and large, when I have that separation, the smalls are below the large are wide, that space is there. That gap is strong triggers. That gap lets me know that the odds are favorable for the market to continue in the direction of the trend. That gap gives me the potential to break key Fibonacci areas. That gap will cover a lot of mistakes that new users make. And that gap, guys, is when we're buying on a smaller, faster chart, Fibonacci support, or we're selling on a smaller, faster chart, Fibonacci resistance. On that big, slow-moving chart, it looks like a tail or a wick. On a smaller, faster chart, you're going to see a full retracement and a bounce. And rule number 3 is going to help you pinpoint where this tail is most likely to form. You're going to use that concept to go back and study this and prove this pattern and make sure that you understand it. So momentum is really not a difficult lesson. It's simply separation between the small and large. And let's do that. And this is going to be great when we have termination conditions. Separation between the small and large. Does everybody see it? Can you give me a why? This is strong triggers. And the cool thing is, that was a potential entry long. I'm not sure if it was for real or if anyone caught it, but that was a potential entry long. In a downtrend, separation, that's it. Don't overcomplicate it. And we talk about having rules met, and we also talk about not having rules met. So when your scissors close, when your small triggers work their way back inside of the large triggers, ladies and gentlemen, this is weakness. And when you have weakness, anything can happen up or down. So it's the same idea. When I have weak triggers, I have to say to myself, anything can happen. When I have strong triggers, I want to say out loud, scaring the cat, I have a market where it's likely to continue in the direction of the trend. Strength pushes, weakness, retracements from nowhere. Key Fibonacci areas tend to hold. When your triggers are that wide, it's not necessary to wait for the tail to get inside of the large trigger. Cav, I'm assuming that's your rule. Guys, whenever people throw absolutes into this room, please ignore them. Follow your plan. Cav, no offense. If you're taking a high probability trend trade, you're using the entries on a smaller, faster chart, you're not even paying attention to the tail, right? You're talking about this one? Yes, I never even mentioned it pulling back to the triggers though, did I? I just said every tail or wick is a potential entry. Hee language. Pretty cool, right? So you're absolutely right, Cav. That's a potential entry the same way this is a potential entry. Cav knows the entry rules so well that he's thinking 2 steps ahead of the average new user. So strong triggers, guys, leads the way. Strong triggers pushes, covers mistakes, can break key areas. Momentum is advantage number 1 for a reason. And guys, you're going to see exactly what Cav meant when we get to entries, but we're a little ahead of ourselves on that one. Once I have momentum, I have to make sure that I'm not trading into a brick wall. I have to make sure that I'm not trading into an area that has the potential to stop the market. And I took some pictures the other day. I want to make sure that I have the best of the best. I want to make sure that my path is clear. I want to make sure that there's nothing there that could create a bounce. No termination conditions, no areas with the potential to stop the market. Because I really want that clear path, guys. I want nothing between me and my targets. And I'm going to be able to do that again on the large chart. The large chart defines areas. And termination conditions, are Fibonacci-based indicators. Nope, you are definitely missing a mid-band. And it doesn't look like you have divergence either. And Boaz, I rebuilt every one of my charts today because I was having the same issue. You may want to get with Jason on that one in tech, because I need to get with Jason after class and figure out what's going on. I reached out to my brother, but I haven't heard back. He's probably sleeping in. But yeah, I would get a tech ticket in for that. Areas that can stop the market, guys. Fibonacci support, resistance, 1-to-1s, divergence highs, divergence lows. The easiest way to think about it is areas that may stop the market are those horizontal lines on a large chart. This is where decisions are made. This is where the large crowd, where buyers buy and sellers sell and fights happen and reversals come from. And guys, you know where they are long before the market ever gets to them. So if the big crowd is making decisions at these areas, it kind of helps you remember how to identify a termination condition. Price reaches the area. That's the first thing that happens. The large crowd, in this case the buyers, get to Fibonacci resistance. And once price reaches the area, you're done with price. The trigger lines will tell the story. So when price reaches resistance, I want you to ask yourself, where are my triggers? And if they remain below, guys, this is a termination condition. It could create an untradeable bounce. It could stop the market cold and create a fight between the buyers and sellers. It could break, or it could reverse the market completely. And that reversal, where the large triggers go from green to red, that turns this into a strong top. And a strong top isn't mandatory to take a high probability trend trade. It's not rule number one. But a strong top sets you up for the highest probability trend trade you could ever take. A strong top sets you up for the HVA trade that you may learn later. It sets you up for momentum trades that you may learn later. And guys, strong tops are it's the precursor. It just makes you feel better about anything you do the other direction. In this case, the market does reverse. It comes all the way down to Fibonacci support. And when price reaches Fibonacci support, all you have to do is say, where are my triggers? If they remain above Fibonacci support, that could be a divergence low. It could also be yellow 1-to-1s. But if they remain above the area is a termination condition. That termination condition could create an untradeable bounce, a fight. It could break. It could reverse and become a strong bottom. And the one thing that I want you to understand is that you will never know what the reaction is. No one will ever send out an email or a fax or a smoke signal and say this is what's going to happen. So your highest chance of success is if price reaches an area and the triggers don't break, is to do nothing. To do absolutely nothing and wait for the reaction. Is the reaction going to be an untradeable bounce? I don't know. Is the reaction going to be a reversal? I don't know. Is the reaction going to be a fight? I don't know. Is the reaction going to be a break? I don't know. But breaks happen all the time. Areas break. Price gets to the other side of areas, and that's okay. But triggers getting to the other side of the areas, that's what lets us know it's broken. So The first thing that could happen is price reaches the area, the triggers remain below. This is a termination. Sit on your hands and wait for the reaction. Rule number 2 is the most broken rule in the world with Nexgen. Because people say things like, with all this momentum, it has to break. Well, it came from a strong bottom. It has to break. It should break. Guys, it might break. It could break. Nothing is ever guaranteed. So price reaches, no triggers, no trade. Once the small triggers, both lines, and the large triggers, both lines, get above resistance, now the path is clear. It stays clear until you reach the next area. And Fibonacci resistance begins to behave as Fibonacci support. So it's either a termination or a clear path for your first couple days with me as you learn these concepts. And it opens the door for your second trade. This is your medium probability trade. This is your 50-50 trade is what it's called. And it's called that because 50% of your triggers, the small, smash through the area, but 50% of your triggers, the large, haven't yet made it above. Guys, this look is only a potential trade if you have odds favorable momentum. So you have to know that lesson from rule number 1. And it's that momentum and the trigger location that lets you know that this area has the potential to break, but it's only potential. And rule number 2 isn't met, which means you'll have to manage a little more aggressively, a little more assertively. Maybe you take quick profits, get to a zero loss level a little faster than you would if there were a clear path. So it's the same either direction. Every line you hit is going to be a termination condition, even if it's only for a fraction of a second. Then it has the potential, and then it's finally broken. You'll see that support behaves as resistance, and your path remains clear until you hit the next area. Let's see if it happens in real life. Fibonacci support, the smalls break through, but it doesn't break. It comes back to Fibonacci resistance, none of the triggers break, and the market goes down. Look how it came from a termination condition. It pushes to support, doesn't break, back to resistance, doesn't break, back to a divergence low, doesn't break, back to a divergence high, doesn't break, back to support and a divergence low, doesn't break, back to one-to-ones, divergence high to the freaking tick, doesn't break. They try to break to the downside. It had the potential, and then it went up straight to Fibonacci resistance 2 times, didn't break, all the way down. Guys, what you're looking at right here is rule 2, keeping you out of 32 flavors of heartache. 90% of your day is doing nothing. 90% of your day is waiting for these advantages, guys. And that was one of the best examples of not giving money away when you don't have to. Avoidable losses. So there's going to be times when your path isn't clear because areas are stacked, because the market is ricocheting off of these lines. And guys, this is 90% of your day. And it's okay to do nothing because the futures markets trades $1 trillion a day. They say like $220 billion an hour is exchanged in the futures markets. You don't have to be in every move. You don't have to be the first one in. You don't have to be the last one out. You need to be able to recognize momentum in a clear path and find a way to make 400 out of that trillion, and you're in a 6-figure income, guys. And it's pretty outstanding. So can you give me a why? Large chart lines can stop the market. And guys, this is an hour and 10 minutes. Show of hands. If you're an ES trader, has this been the longest freaking hour and 10 minutes of your life? You're thinking to yourself, I'm never going to make any money. This sucks. I hate this. But guys, the next trade is coming. The next trade is always coming. The next trade will be there. Be patient. 90% of your day is doing nothing. In a 6-hour day, you might be active 36 minutes out of the day. So learn how to be patient. It's going to save your bacon. And then there's one more termination condition that I'm going to talk about This termination condition, it happens on every chart. You'll see 3 divergences in the same price range on your large chart or your small chart, and both of them can end a trend. But because your small chart is such a faster chart, it's a refinement chart, you'll see 3 divergences in the same price range on a smaller chart before you ever see it on a large chart. And what it's going to do is it's going to take that very slow moving chart and it's going to give you a heads up. So you see on the large chart, 1 bar says momentum, it defines trend, and it lets you know that those 1-to-1s have the potential to break. But then your small chart says, check it out. 3 divergences. 3 divergences in the same price range. Guys, we may push up. There may be a big untradeable bounce. There could be a reversal. This is the only termination condition that I'll ever accept on a small chart, and the only time I won't take a high probability trend trade if I have momentum and path established on the large. So this happens everywhere, but this is your heads up. This becomes a great management tool. Boaz, you said you had to change it to 8 days. That's awesome. Thank you for sharing that. I got a buddy that needs that info too, and I'm going to need it as well. All right, we made it through the first 2 rules, guys. Large chart leads the way. Large chart says you have to have strong trigger lines. Once you have it, this is a flow chart. If I have momentum, then I need a clear path. So we're going to make sure that there's no termination conditions, nothing in the way that could create a bounce. And guys, if my large chart says giddy up, now it's time to go to the small chart. Now it's time for the accuracy, the precision, the refinement. And guys, rule number 3 is going to have you using a limit order, which means you're actually going to wait for the market to come to you, and you're going to buy or sell a pullback. And that's that fight created by the small crowd. It's that retracement that goes against the trend. And you're going to do it at areas. The same way areas on the large chart could create a big ugly bounce, they can create a magnificent bounce in the direction of the trend. But here is the kicker. And guys, this is what Cav was referring to. Your areas need to be inside of triggers. And this is a big part of it, because triggers are going to define where the retracement is most likely to occur. That's all we're going to use the large triggers for, is they're going to tell us, hey, your retracement, because price returns to triggers, might go somewhere from the top of these triggers to the bottom of these triggers. And you can define right where the retracement is likely to go. It may stop at the higher one, in which case your tail won't ever make it to those large triggers. It may go all the way down to the lower one, which means the price blows right through the higher. And guys, all you're doing is you're just identifying where those down bars are most likely to occur. So if you want the highest level of accuracy, allow them to be favorable large triggers. I like that phrase, favorable. Because favorable large triggers mean that the large triggers and the synthetic triggers, the large triggers from the 5-1 and the 13-2, are overlapping, one on top of the other, like 2 snakes riding piggyback. And guys, when they're tight, one on top of the other like this, you have the smallest range where the retracement is most likely to occur. And then when you put fibs, midbands, or yellow 1-to-1s inside, you have the smallest range where the market is most likely to bounce. And favorable large triggers will give you the smallest window of opportunity. Favorable large triggers will typically give you the least amount of risk. So we're going to focus on an entry real quick. Once the rules are met on the large chart. Have I mentioned that the rules need to be met on the large chart? Ha ha! Favorable large triggers. Oh my gosh, I am stealing this picture. That's awesome, Better Dad. 2 snakes, 3 snakes, 4 snakes riding piggyback. What a great visual. Guys, when the rules are met on the large chart, I love that. I've got the biggest smile on my face right now. I'm going to turn my attention to the small chart, to the fast chart, to the refinement chart. And guys, the first thing you need is a reversal bar. And that's going to be the visual that the pullback is starting. So when the rules are met on the large chart, your small chart is absolutely screaming north. Your small chart has odds favorable momentum. And you're going to look at those trigger lines and say, well, if it does retrace, that's where they may go. And you're going to look at those areas and you're going to say, well, if it does retrace, that's where it may bounce. So we're going to let it start to retrace. That's the reversal bar. That's the fight from the small crowd. And all you're going to do is identify where that fight is most likely to return, where that retracement is most likely to go. So price tends to return to the large triggers. Price always returns to the large triggers eventually. Small chart and large chart. So I have large triggers that are native to the 5-1. Those are smooth. And then I have synthetic triggers. Those are from the 13-2. Those are kind of stepped. And guys, from the highest line of the triggers, large triggers, to the lowest line of the large triggers, this is where the market's most likely to retrace. And the tighter they are, one on top of each other, the smaller this area becomes. And this is going to help with accuracy. But reversal bars are not our entry. They signal the beginning of the pullback. Trigger lines are not our entries. Trigger lines aren't bouncy. Not at all. We need areas. So once I understand where the market may return, I need areas inside of those triggers. Areas can be fibs, mid-bands, and yellow 1-to-1s. It's not only mid-bands, it's fibs, mid-bands, or 1-to-1s. Any of them, any combination. It is not divergence low lines. It's not pink 1-to-1s, guys. Fibs, mid-bands, yellow 1-to-1s. And then there's that magic phrase, inside of triggers. So this box, much smaller than the retracement zone, this is where the market is most likely to continue. This is from the highest point of support inside of triggers to the lowest point of support inside of triggers. And this shows me precisely where the market is most likely to bounce and continue with the large chart trend. This shows me precisely where the small crowd is most likely to fail. And guys, if you give this entry 3 or 4 days worth of study, you'll have the courage to activate a limit order 2 ticks above that highest point of support. And at that point, you've done all you can do. Now it's up to the market to give you an entry. So we're going to back it up. Is everybody with me? First, the large chart rules are met. We're going to wait for the reversal bar and identify where that retracement is most likely to occur. You're going to pinpoint where it's most likely to bounce. You're going to trust it, and you're going to put a limit order 2 ticks above the highest point, because remember, the large chart is a freight train with nothing in the way. We don't want to miss this trade. And man, if the small crowd has it in them, you're in a long position. If they come back to your limit order, you're in. And you're not just in a trade hoping it goes up. You're in a trade with the advantage of a market where the odds are favorable that it'll go up. And there's nothing in the way to create a bounce on that large chart. And you got in exactly where the market is most likely to continue. And guys, this is your high probability trend trade. This is your entry. This is our focus for 20 days. Learning how to recognize large chart advantages so we can turn them into small chart entries. So we're going to go through the entry both directions. Reversal bar begins the pullback, is not the entry. Trigger lines define where the retracement is most likely to occur. Trigger lines are not bouncy. They are not the entry. Your window of opportunity, the range where the market is most likely to bounce and continue, extends from the highest line to the lowest line inside of triggers. All caps every time. Write it on your chart when you're taking entries. Because once you get below the trigger lines, guys, if price can push through the most likely retracement zone, if price can blow through the areas most likely to create a bounce, once I get below these trigger lines, I'm where the market shouldn't go. Rule number 3, advantage is no longer present for me. So any line on the outside of those triggers, beyond the retracement zone, beyond the areas that may create a bounce, guys, this isn't a part of the equation. This is no man's land. This is the wasteland. And you don't know if, when, or where that market may continue up. Rule number 3, advantage is gone. So once again, large chart's down, large chart's screaming, large chart has nothing in the way, and I'm going to wait for the small chart to go up with a reversal bar. And I'm going to say to myself, This isn't my entry, but I sure do know where that retracement is most likely to occur, somewhere from the bottom of the triggers to the top of the triggers. And I'm going to say to myself, that's not my entry. Trigger lines aren't bouncy. I think it's funny because a lot of you are going to start saying that. I need something solid inside. I need a fib, I need a mid-band, I need a yellow 1-to-1 or any combination of the three. Guys, I have one mid-band, one magical line where the market is most likely to continue, where the small crowd is most likely to fail. You're going to activate your limit order 2 ticks below it. And anything on the wrong side of the triggers. Why do I call it the wrong side of the triggers? Because once price gets beyond the retracement zone, once price gets through the areas most likely to create a bounce, guys, this is where the market shouldn't go. I don't want entries as a new user from the wrong side of the triggers because I don't know if, when, or where that market's going to stop and continue with the trend. This is where the market should not go. And you're going to use that concept for your first stop placement. So by identifying where the market is most likely to continue, you've also defined where the market should not go. And that's your initial stop, guys. Generally 4 to 5 ticks above those trigger lines in a short, 4 to 5 ticks below those trigger lines in a long. And you're going to say to yourself, if they want my money, they're going to have to come get it. They're going to have to do the work. I'm not going to put my stop where the market may retrace. I'm not going to put my stop where the market may bounce. I'm going to put it where they shouldn't go if this is going to be a winner. And guys, 70 to 80% of the time, they're probably not going to hit your stop. The potential is there because this is the pattern. 20 to 30% of the time, they're going to blow through everything and take your money. And this is a cost of doing business, guys. Small losses are a normal part of a positive equity curve. What you're learning to do right now is take good losses. It's a good death. Because if they make it through all of that, your advantage is gone. It's best likely to stop and create a bounce. They've done the work. They can have my money. I just paid rent and bought supplies for my trading business, and I'm going to go on to the next one. But what I know is that if I learn this pattern, if I follow these rules, if I get in at the best spot with the advantages, this is a trade that has the potential to win 70 to 80% of the time. This picture shows you how those tails can be used to study. If you scroll back historically, and guys, your charts go back 10 days, every time you see momentum and path, whether it's potential or broken, and you see one of these tails, circle it. If that circle lines up with an area in the retracement zone inside of triggers, guys, that's a potential trade. This is your pattern. This is the pattern that's been proven to win more than it loses. And things that I want you to remember, these 1-to-1s on a small chart are not a termination condition because termination conditions happen on the large chart. These triggers rolling against you are not a loss of momentum that should keep you out of a trade because momentum is defined on the large chart. And guys, by waiting for the areas inside of triggers, what you've done is you've given yourself the furthest distance to get back to that line that could stop the market. So this is the highest probability trend trade, guys. This is the one that's going to set you up for success. This is the trade that wins more than it loses, and it's just a pattern. And let's go back and circle that tail with all that momentum and the potential to break. And what did it look like on a smaller, faster chart? Look, my smaller, faster chart is wonky. But it sure enough came right back to resistance inside of triggers. Can you guys give me a Y if you see it? And I'm going to reload my historical data real quick and try and fix my triggers. But guys, this is your pattern. This is the pattern. This is momentum. This is the potential to break. This is the pullback directly to resistance inside of triggers. And with all that momentum, holy crap, down it went, straight to Fibonacci support, where those weakening triggers created a big, ugly, untradeable bounce. Ladies and gentlemen, this is what we do every day. This is what we talk about every day. This is our goal every day, is to be able to recognize this. And then there's a way to get there sooner than later. I'm going to give you that. I promised you the how to study. Guys, chart reading 101. Start snapping pictures. The more pictures you take, the quicker you're going to get to where you want to be. And this kind of goes on the premise that you're not going to become an awesome chart reader from taking 4 or 5 trades where your adrenaline is high and your anxiety is overflowing and your palms are sweaty. You can go back and take 25 pictures each. Guys, this whole process will take you a couple hours tops. Take pictures of strong triggers. Whoops, I've got corrupt data. Take pictures of weak triggers. Take pictures of a clear path. Take pictures of termination conditions. But don't just take pictures. Annotate. Why are they strong triggers? Because they're separated like scissors. Because the colors match. Because the smalls are above the large. That space lets me know that I have odds favorable momentum. Rule number 1 is met. And if you go through that, guys, you're going to stuff them into this spreadsheet. And you're never going to make the mistake. This says strong down. What does it look like? Smalls below the large, all red, space between, strong triggers. I have momentum. Rule 1 met. When I have strong triggers, this is the best time to sell Fibonacci resistance on a smaller, faster chart. Looks like a tail here. I'll use this to study. Does anyone believe that they could do that 25 times and ever make the mistake between the two? Is anyone convinced that they could take pictures of 25 termination conditions and then trade into them unintentionally? It's not very likely. That's how you're going to get to where you want to be the fastest, guys. Take a lot of pictures. Let me show you something. Let me show you something. Check this out. In 2025, I've taken 1,559 pictures so far this year. It's March 13th. In 2024, I took 7,800. That actually started in March or February of 2024. Since I've been with Nexgen, since I've started learning, guys, I've probably got 30,000 pictures. And I'm telling you, repetition creates recognition. The more pictures you take, the faster you're going to get to where you want to be. This second sheet that I'm going to give you, this is the high probability trend trade checklist. This is what it means to have your rules met. Is the market coming from a strong top or bottom? Well, it's not mandatory, but it sure does create some warm fuzzies, and you've got to know this concept to be able to take that 50-50 trade. So, what is it? There's your definition. It's a strong top or bottom where no triggers get through, and then it reverses the market. No triggers can break above or below. Momentum is always momentum. Weakness is always weakness. This is going to help you when you take those pictures. It's either a termination, has the potential, or is a clear path. And guys, all I want you to do is look at your large chart and say, no trade, manage assertively, go cat go. Define your entry. Know where to put your entry. Know where the market shouldn't go. And guys, this is the high probability trend trade, the second sheet. And this is designed, hey Morgan, show me your price bars, or show me the price on the side. Because even though it's way below, I know, but even though it's way below, it looks like it still got you out at your target. It just didn't register it till back here. I don't think you got slippage. You only got 3 points on it. You didn't get the 8 points. NinjaTrader will do that sometimes. If it's so fast, it'll just register a little differently. But that would have been great slippage. And sometimes it will happen. So guys, this is the trend trade checklist. You should print this out, put it on your desktop. Some people laminate it. Hey, good morning, Alexandro. Nobody in the history of this checklist has ever been able to follow it truthfully and do worse than 70%, guys. I've had a lot of people try, mostly in an effort to prove me wrong, which I love. Do that. But with a strong top, with momentum on both charts, nothing in the way in an area inside of favorable large triggers, that's your recipe. So Lonnie, I'm going to give you, I'll drop it in right now. There's a zip file that I just dropped in the room, Lonnie. Whoops. You can take that zip file, you can download it, or you can even grab it and drag it over to your computer. And that's literally everything you need. This is in it. Oops. Chart Reading 101 is in there. And you're also going to get this. This is the KISS plan. This is the Keep It Simple Sunshine plan, unless you're Bob. And you know what I'm saying. And guys, this is your written plan. This is your roadmap to success as a brand new user. This is a plan that's been used by Nexgen clients, brand new Nexgen clients, to get funded in prop firms in the first 30 days. And guys, this KISS plan, this is the beginning. You're scratching the surface here. You're just getting your basics down. This KISS plan is a stepping stone in your learning journey. It's not your get-rich trades. These are the ones that teach you to recognize your get-rich trades if you decide to go outside of it. This plan optimizes your chances of success with the high probability trend trade. This is the best way I know how to take this trade, so I'm giving it to you. Alessandro, I don't know. What chart? What market? Mine didn't load right there. Mine said my data was corrupt. Oh, there it goes. So Alessandro, if you ever have a challenge, we'll always do whatever we can do to help. But come over here to tech support and let Jason fix it. He's amazing. And most of the stuff that it takes me 20, 30 minutes to diagnose, Jason can fix in a couple seconds. He's amazing. The only things Jason can't fix are the things that aren't broken. So guys, this KISS plan is just there to help you learn to read your indicators, to give you a plan capable of being profitable as you learn to read your indicators. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, once you can read your charts, you're going to see more stuff. You don't necessarily need it, but most of us like to be active, and this will help set you up for the next step. But there's two things you have to know before you sit down to trade and you're not on simulator. And I put that on there when you're not on simulator, because when you're on simulator, hell, take everything you see, drop it in the room, let's talk about it, but keep it focused on chart reads. But why will I enter a trade? Because my rules are met. How's that for the lamest answer ever? Because I have an advantage, because I have an edge, because my rules are nothing more than a description of a pattern that has been proven to win more than it loses. That's it. The market has a memory. And guys, if you take the time to verify, to go back, to circle those tails, to look at it, to study it, to learn to trust it, there's no reason for you to ever miss out on a high probability trend trade when your rules are true. And your rules are going to help remove the emotion, because you'll never know what's going to happen next in that trade, but you'll know that if you take that same pattern consistently, you're more likely to win more than you lose. And then you've got to know why to exit it. And guys, exits are where most of us fall short as new users, because there's this fallacy that every trade has to be a huge trade. Every trade has to be a home run. Every trade has to be $500 or $600. And new users hold forever, and they hold through their advantages being gone. And guys, exits are taken either at profit targets or when the advantages that got you in are gone. So if you enter a trade, a high probability trend trade, and it goes 4 to 5 ticks beyond those trigger lines, your advantage is gone. That's an exit condition. If you enter a high probability trend trade and 3 divergences print on your small chart, your advantage is gone. That's an exit condition. So as much as you're learning to define your entries, you're going to have to manage the trade. So the KISS plan management is based on 2 contracts, and it's designed to help you understand and trust stop placement, using that phrase where the market should not go. And it's designed to get you paid, because that's the goal of trading, guys. And you'll be floored at how little you have to make a day to have a pretty awesome year. So the KISS plan from the management plan, or the management plan and the KISS plan, is dependent on your ability to enter the market 2 ticks below resistance inside of triggers, to believe in and trust that this is your highest chance of success. And that takes a little bit of study. And if I enter 2 ticks below the triggers, then my initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. And guys, you're going to know your risk before you ever enter a trade. And you're going to be able to decide if you're willing to accept that much risk. You're the only person that can answer that question. But if you say this $150 worth of risk is more than I'm willing to risk, it's better to not take the trade than it is to arbitrarily put a stop right below resistance inside of triggers, than it is to just randomly put a stop inside of the retracement zone where the market should not go. And your targets are predefined at $100 and $200. And guys, 20 to 30% of the time in the high probability trend trade, they're going to get up there and get your stop. That's how math works. But 70 to 80% of the time, you're more likely to get a reversal bar in the direction of your trade. And this is going to redefine where the market should not go. Your new stop is 2 ticks above that reversal bar. 2 ticks, guys. Your $150 per contract just turned into $30 per contract. That's pretty awesome. That's a significant cut. And it doesn't guarantee a winner, but it guarantees that if the small crowd kicks it into high gear and decides to push up, guess what? You've only lost $60. But again, more often than not, they're going to go to your first target instead of hitting your stop. And guys, if price reaches your first target, 1 contract is automatically removed. Those funds go into your account. This is a win. This is a $100 win, and it doesn't feel like a lot, but $100 is pretty cool, and it adds up. If the best you do every day is $100, you're still adding 25 grand to your trading account. Guys, with 1 contract remaining, you're going to move your stop to break even. And as a brand new user, adhere to the KISS plan. Resist the temptation to let your emotions take over and move stops to lock in. We saw a couple trades yesterday where people got 4, 5, 6 ticks in the direction of their trade, locked in 2 ticks because they couldn't stand the thought of losing, make their 2 ticks only to have the market run another $400 in the other direction. And they just missed out because of fear. This plan helps you eliminate fear because once you're paid, you're going break even. You have nothing to lose and money in the bank. Sit tight. If it doesn't get you break even, it's going to your second target, which is only $200 in the distance from your great entry, which means that if price reaches your second target, you're out of the position. It's $300 in your account, and guys, who cares what happens next? In this $300 isn't your trading day. Guys, this $300 is 4 minutes of your trading day. And if that's the best you do every day, this is in that zip file I dropped in there as well. It's a $75,000 year for 4 minutes of your life a day, 1 high probability trend trade going the distance. That doesn't suck. You're not going to get stuck at $300 a day, guys. You're going to see the potential with a little bit of study to make between 5 to 700 pretty easy on a 2 lot. You can use copiers. You could turn a $100 trade every day. Mirror it on 10 accounts. It becomes $1,000 every day. Hell, that's $250,000, a little more. So the goal isn't to make all the money every trade. The goal is to get paid consistently, to reach your profits consistently, to let them add up and amass over time, and then let your profits add contracts. Let your profits add second accounts. Let your profits take care of it. Play with that house money. So all of those are in that file that I just dropped you. You've got these daily goals reminding you it doesn't have to be a home run. You've got the high probability trend trade checklist. You've got the KISS plan. And guys, the KISS plan's second page is how to take that 50-50, designed to optimize your chances of success. And it means that it has to come from a strong top or bottom, so learn the lesson. It means that you have to have odds favorable momentum on 2 charts. Make sure you know those lessons. It means that you can't have divergence. You can't have divergence. Oh my gosh, you can't have divergence. It's the biggest killer of that 50-50 look. and you're going to manage assertively, guys. So that's on there as well. They're all in there for you. And then I'm going to give you also inside of there. So Lonnie, this is great if you're brand new. This is everything that we just discussed for an hour. This is how we teach, what your core is. Here's your rules, where to find them, the indicators defined, defining momentum, defining terminations, defining your entries, how to study. 2 pages, guys, consolidated into 2 pages to make it as easy as I know how to make it. There's also a picture. I love this one. This is in there. Sorry, this is in that file. Along with the PowerPoint that I used to teach, guys, the pictures you can take. This is just a suggestion. This is what I do every trade that I take. I take one when I activate my limit order because I want to make sure that I'm following my rules. And I'll come back and look at it after. I don't annotate it in the moment because I'm busy. I'm trading. But what I'm doing is I'm making sure that I didn't miss something in my initial reaction, because that can be a huge tell on what I need to be a little more focused on. During the trade, every time I take a trade, I take pictures when I move stops. I take pictures when I take profits. I ask myself, did anything change? Again, I don't have to annotate in the moment. I'm going to use this picture to work on my management plan. After the trade, this is where I'm going to go back and I'm going to write my rules on the chart. I'm going to write my chart read. I'm going to define my rules, my entry, my exit, and I'm going to talk about the whys. I'm going to create that recipe to repeat success. And then I'm also taking a picture if I don't take a trade. Jen is one of my star pupils on the don't take a trade pictures. She'll watch the market, and instead of taking a trade, and I think you put one in here today, instead of saying, man, I hope it goes, I wish it would go, I want it to go, why want it to go? Was this the one, Jen? Jen says, you know what? I do have a clear path almost, but 3 divergences means no trade. So she'll post the no trade picture. And then what I'll do is I'll look at it and we'll make sure that it actually wasn't a trade. And I'll say, well, let's just take a look at it. This is a strong top because none of your triggers got through the fibs and it reversed the market. And this isn't a clear path because that fib right there hasn't been broken by the large triggers. And I'll say, Jen, with a strong top and only 1 divergence, maybe you could take the first entry. 2 divergences is likely to kill it. You could have even taken that one if you're feeling risky. But 3 says no more, and sure enough, that's the one that creates an untradeable bounce. Lonnie, have a great day at work. Everything that we're doing today is recorded. Feel free to come back. And it's kind of neat because those no trade pictures very often, for brand new users, there maybe was a trade. So 3 and 4, guys, those are the ones I want you to put in the classroom to get the feedback. Those are the ones that we're going to make sure that your chart reading is correct. Those are the ones where you're going to get feedback on entries and exits. We're going to celebrate all the victories, guys. We're going to learn how to correct the challenges. And that's what we're about to get into. We're about to get into the second half of class. And the second half of class is where I go through every picture that you guys have posted. Lonnie, are you still in here? Did he jump ship already? I wanted to look at his picture. Guys, if you ever have to go to work and you know you have to go to work, tell me to look at your picture. Tell me, hey, Mark, I got a split. Let's talk about it. And when I come back and talk about these pictures, guys, I don't tell you when to trade. I teach you how to read your indicators so you can make decisions on when you're going to trade. So everything posted in the room, we're going to talk about the momentum that I see, and we're going to compare it to the momentum that you saw. We're going to talk about the path that I see, and we're going to compare it to the path that you told me you saw. And we're going to look at your entry, guys. And if there's a way to do it with less risk or higher profits, same thing with the exit, we're going to discuss it. So new users, I'm going to give you a little warning. You're going to see trades that are not high probability trend trades as we get into the second hour. You're going to see trades that fight things, that don't have all the rules met. And just understand that I don't need you to be the trade police. All I need is for you to look at the advantages and to talk about them and to realize that that's all trading is. It's a couple advantages put together to take a trade. So I'm going to go stretch my legs. I'm going to mute the room. I'll be back in 4 or 5 minutes, and when I come back, We're going to start looking at pictures, guys. Post them if you got them. Ask questions if you have them. That sure looks like momentum, and the path is clear. It's almost separation, not quite. There's only one line inside of triggers. You guys let me know what happened when I get back. I'll see you in a minute. All right, y'all. We're going to get back to it. We're going to start looking at some pictures. I'm going to scroll up to the very top of the chat box, and I'm just going to go through these one by one. And I love it. Some of you threw like stacks of pictures in there, which is cool because it means that you're working, and that's a good thing. So Jen says, check it out. Term, no triggers through. Everything's going down. It has the potential to break. And she says, wait a minute, my area isn't on the right side of the triggers. It's not inside of the triggers. It's on the wrong side of the triggers. Divergence on a 50-50 can be problematic. Jen waits for a confirmation bar. Jen says, I'm going to force the market to go in the direction of my trade because I know I can put my stop 2 ticks behind it, and I feel better about all that momentum carrying me to the fib. And Jen, you did it beautifully. Nicely done. And then we have the no trade picture that we just talked about. And Jen, it's funny, isn't it? Because, and guys, I notice these things. On this picture, termination, odds favorable, potential to break. You take it with confirmation with a single divergence. Termination, odds favorable, potential to break. You choose to not take it with a single divergence. Did you notice that? I thought that was interesting. It's the exact same look. Something made you not feel right. I don't know what it was. And what I think it was is you didn't recognize this as a strong top. And I bet you that's the difference. Yeah. So that's great. Great job. But I think when price came up, and these were kind of in the moment fib updates, which might have been a little confusing. But definitely a strong top. Great trading though. And I think that's good use of the confirmation bar. All right, Wayne, let's see what you did. Missed the HVA line entry. So typically HVAs, the trade, rule number 1 for the HVA is termination condition large chart, Wayne. Didn't have it. But it was there. And notice how this had the potential to break but didn't. And Wayne's like, man, wait a minute. My small chart's showing me change. My small chart's showing me change. Let me see if I can capitalize. And you did a great job of it. You took it right down, right to the large chart midband. And just a quick little snippet. Nicely done, Wayne. But it's not a true HVA trade. But guys, what the HVA means, if you're using these charts, you'll find that I use like little phrases and stuff to describe it. When the sellers decided they wanted to push down, this pink line represents the highest concentration of sellers on this bar, this breakout bar. So very often if the market comes up and taps it, what you're seeing is the buyers trying and the sellers unleashing. And that's exactly what happened there. And then Wayne, you just got it a little late, but great job on that one. All right, and then we have a stack of them from Wayne. Let's take a look. Wayne, a lot of lessons in these. I hope you're listening. Whoops, did I miss one? Nope, that's it. Had the choice between the chili dog, which is odds favorable momentum and clear path, or Wayne's heartburn trade, which is counter to everything in creation, but tends to work every now and then. And you chose the chili dog because you had the best momentum ever. You had the best momentum ever. You had the best momentum ever. And you took it perfect, Wayne, and it just didn't work. Maybe held a little longer than you needed to, but it just didn't work. And that happens sometimes. So great execution on that one. Great job following the rules. And then this one, Chili Dog with massive slip when the market printed 2 pages on the large chart within seconds. And I'm not sure where your actual entry was supposed to be. On this one, Wayne, definitely no room to targets. But you didn't go short. You went long. Your entry, no, never mind. Your entry was short. My bad. I take that back. So you went short on the wrong side of everything, but there was huge slippage. So it's hard to tell. The entry was long. This says it was short. The pink arrow on the left side of the bar. So if the entry was long, you fought everything. I don't know why you did. No worries. Odds favorable momentum on the large chart is the worst time ever to go long, and I guess that's exactly what happened here. The faster against you there. So one of the rules for the HVA trades, maybe this will help a little bit, is that your HVA line is at the fast triggers, your HVA line is at the large triggers, and when it's on the wrong side of everything, it's the same mentality. When I get below the moving averages, when I get below the trigger lines, I'm not sure what that means. So this says Chili Dog, so I'm looking for a momentum style trade. Do you see how this is difficult for me? I see a short, and then there was a long, I suppose. Printed on the chart, a page and a half. Okay. So we'll just skip this one because it's unreadable for me. I can't diagnose your read or give you feedback on your read if I can't see the complete picture. That's tough. What is the F? Is that Chili Dog fail? Okay. So let's see what you did. Went short. This says that you went short. So I guess that was your heartburn. You don't have a long trade here, Wayne. You have a short to a target. You have a short to a target. So your second short doesn't have odds favorable momentum. The synthetics are still up. That's a challenge. Do you see that? It's the immediate momentum. But if you're not coming from a termination, that immediate momentum isn't that great. You're actually going short into a mid band and the large triggers. Yeah, that's what I noticed on this one, is that you hadn't gotten that odds favorable yet. And you didn't have it here yet, but you did have it on the very small chart. I see why you did what you did. I think a little bit of patience from a bad top so close to a mid band. Does that make sense? I knew there was a lesson in here somewhere. And Wayne, that is when you start getting so stinking good at your plan, you start anticipating it a little bit. And again, Chili Dog without momentum. I don't know what the pink line is. You did clear the back, but you don't have odds favorable momentum. You did have odds favorable momentum here. I can't tell on the small chart. You're not showing me your entry. But without that large chart giving you that big push, you just got to manage a little aggressively. And you did. You did a great job managing. This look, Wayne, would be your heartburn trade because you're not fighting odds favorable, I think. Change the color since you missed the quick fibs working on Chili Dog. Right on. I like the management though. I like the quick management, not being willing to give a lot back when it doesn't go. So nice job. But odds favorable momentum on the large chart is always better for the chili dog. And I bet this one was super easy. Odds favorable, back of the bar clears, odds favorable, and I love that they gave you a little love on the entry. And sure enough, it goes. That's your look. That's your look for the chili dog. That's your highest chance of success. Getting that both triggers green separation, nothing in the way. That's an awesome one. I love that one. And there's your heartburn down at the bottom. Good stuff, Wayne. I think on that one, that one where the triggers hadn't rolled yet, you knew exactly what you were going to do, and you just did it. Just a fraction before it was ready. Whoops. I messed that up. We're going to get this going. All right, Better Dad. I love it when you guys put 4 or 5 pictures in at a time. I think it's pretty cool. And it means that I get to talk to you about all the pictures in a row, which is pretty easy. So let's check it out. Odds favorable momentum with the smalls above the large for a long. Weak bottom as triggers are through. So clear path. There is a 1-to-1, but strong momentum made me risk it. Comes up in Word and none of the links work. Do you have Microsoft Word, Ed? Guys, is anyone having trouble with... Let me see. Mine comes right up. Is anyone else having trouble getting these out of there? I wonder why, though. If you want, Ed, when I take my next... Did you extract the zip file? There you go. You do need to extract the zip file. Thanks, Wayne. That's why I'm not the tech guy. No worries, Better Dad. Let me know when you're ready. Let me know when you're ready. So let's go to Bob B. the Man. Weak bottom because the small triggers work their way through. Ed, try extracting it. The files are good. So it shouldn't be a hot link though, Ed. It should just open up in Word document. It's not a link, it's an actual file. I wonder why. Here, try this. Hold on. I'm gonna not have them in that file. I'm dragging them straight over from my computer. Drag these over to your computer, to your desktop, and see if those will open. And then there's even my PowerPoint. We're going to work our way around this. Sorry about that, Bob. Weak bottom, odds favorable, and then Bob trading directly into a termination with the momentum from a weak bottom. You get in a couple ticks above. Not favorable large triggers. There's a huge gap between those triggers, which means that price could have pulled all the way down here. And you're taking targets not at the fibs, but rather allowing momentum to carry them and getting out a little higher. So Bob, directly into a termination from a weak bottom, which is a little more dangerous, taking a shot on it. But with this level of momentum, you get in, you hope for the best, and you got it on this one. You got it. Yeah. Do you need risky, Bob? And don't answer it in the room. You guys don't ever have to answer it in the room. We're building muscle memory. And it's fun on simulator to let them get so big you can't sit in the chair, but it doesn't serve you well long term. Again, weak bottom, no momentum, and you take the long, not even from an area, and you hold it and you make $1,000. Jen. Does that make sense, Bob? It's a weak bottom. You don't have momentum. You're directly into a mid-band without momentum. You're not trading from an area. You're sitting through the retracement and you're getting paid. And your brain's like, oh my gosh, this is the most kick-ass trade ever. And I'm not trying to beat you up. Short-term victories rarely translate to long-term success. And guys, that's what we're going to do in the room. Bob's a pen pal. We go way back. Not really, but you know. Guys, all I want is to see you do well. And I don't mind telling you if I think you're getting a little lucky. And this is one of the most dangerous things that you can ever do. This is one of the most dangerous things you can ever do. Guys, when you celebrate getting lucky, you're telling your brain, don't ever miss this trade. Bob, what you're telling your brain is don't ever miss an opportunity to fight the trend without momentum into a mid-band from a bad bottom, because that's how I make my money. Don't even have like 3 divergences or something to sell, to help. Like, don't even have a small chart termination to help. I would have rather seen you from the weak bottom, off the mid band, everything down. Take the short. Good stuff, Bob. Scrolling, scrolling, scrolling. Got 2 for Wayne. Mom's home cooking. Let me figure out what you did. You went long against momentum. You went long against the trend. You went long with your range chart all pointing down. You went long directly into a fib. And you made money. Wayne, you fought everything. You fought everything and made money. Small above large. I love that you point out small above large, but you don't point out small way below large. Price was here, so I put a buy market. That's fine. Price went up directly into fibs. Wrong side of the synthetics. Everything says down. Coming from a failed 50-50. And again, guys, I've got to point this out. Even this chart says down. Now, if you had gotten in from the HVA, I'm not sure what's going on with this 210, right? If you'd had a little bit of patience, take the little snap back to the smalls from the 1-to-1, from the white bar, at least then you've got a fighting chance, Wayne. It's just everything says down, you go up. Everything says down, you go up. And you don't get indication that anything's going up until a little bit later. Was thinking trend trade should have been using momentum 50-50 management, still a $250 trade. Right? Still celebrating the money I made, fighting everything. And Wayne, it's not even heartburn. It's not even heartburn. So it's a little outside of what you usually do, which is exactly why I mention it. So guys, when we start trading and you start posting, I start to recognize your patterns and what you're doing. And Wayne, that really is so far outside of everything you've shown me in the last month. And maybe you're working on something new. Maybe you are. But it would be awesome. You say, Mom, you're talking about momentum here, but you're fighting it, right? All right, better dad. Directly into a termination condition, and you identified that, and I like this. You're like, okay, I've got momentum, the trend is up, but I don't have a clear path. And notice that there's not divergence on your small chart. There's odds favorable momentum on your small chart. You get into the trade and you put your stop. I don't get it. Doesn't make sense. Yeah, Wayne, it's totally cool. I don't worry about you, but I've figured out your personality enough to know that when you start to get comfortable, you make yourself a little uncomfortable because that's how you learn. And that's okay. Because your core plan is solid. I love it. Stop loss. Place here. And again here. You put your stop inside of the retracement zone, better dad, and they got you. And they forced you to take the trade twice. That's two. Okay, I know it's two trades. So let's do a lesson. Reversal bar signals the pullback, right? The market could retrace anywhere from the top of the triggers to the bottom of the triggers. Stop placement, according to the plan, says 4 to 5 ticks below the triggers. So why would you put a stop at a mid-band in the retracement zone? You never even got a reversal bar. If you waited for the reversal bar, you only have to take this one twice. Entry. Oh my gosh, that's my bad. I apologize. Better dad, I owe you an apology. I'd missed the target there. I apologize, sincerely. You got $100 on a bar that wasn't even an up bar because of a great entry. And then break even. And then you said, my rules are still cool. I'm getting back in. Let me make more. That's awesome. My bad. $100 profits, break even, took it again, made another $300. So $400 trade on the same darn trade using a super mellow management plan. Nicely done, better dad. You took a risk because of momentum and you managed it. Great work. All right, odds favorable, clear path at the same time as triggers roll to green and open up with room to the divergence. Weak bottom, so not a weak bottom. Let's go back to that lesson. Your small triggers are like a car. The bottom line is the front of your car. The top line is the back of your car, better dad. Did your car make it through the brick wall? It didn't. That tail end's still hanging out. You're only halfway into the living room, which means the triggers didn't break. Yep, both lines need to get through for it to be considered broken. So you do have a strong bottom. You do have odds favorable. You do have a clear path because the large triggers aren't a full bar away. You're in 2 ticks above. Stop where it belongs. Is there a second half of that picture? So what happened? This is a cliffhanger. That's the same picture. That's a short. There it is. So that's what I wanted to see. So you're saying, better dad, correct me if I'm wrong, because I've already been wrong with your pictures once. When you have a termination that reverses the market and it creates odds favorable momentum and there's nothing in the way, you have the ability to take the best entry, reduce your risk dramatically with the reversal bar, and get paid. That sure feels like a good plan. Nicely done, Better Dad. 9 days, I was just about to say that. You are 9 days in. 9 days in. And you're there. I don't know what you do for a living, but I'm guessing they took you off the fry station and put you on register in the first week. Because that's pretty outstanding. 9 days in, keeping it simple. Let's see what we have here. Weak top, absolutely. So here we have the gap theory, closes it to the gap. Then everything starts back down, odds favorable, and now the path is clear because the large triggers aren't there. You miss this in replay, good mental practice for fear of missing out. That's okay, it might not have made it anyway. And then you take the perfect entry, your stop keeps you safe, and you make money twice again with odds favorable and clear path. Outstanding, Better Dad. Did you show me the picture of what happened up there? Because there's an entry and an exit up here that I don't see a small chart for. And it was break even, so it looks like one target and then break even. Nice. And then with the best of the best, easy money. So your willingness to manage, to not hope, to not wish, to not want, right? It's awesome. That's all right. I can see exactly what you did. Odds favorable, momentum, clear path. You entered, first target hit. They decided to retrace, and you didn't lose any money on the retracement. And the fact that you're making money on trades that aren't even going the distance is pretty outstanding. Really well done. And I think that was all of them. So let's see what's next. We saw that one. Wayne, did we see this one? Chili dog with market screaming, so markers are funky. Actual entry, actual close, right on. Yeah, from 16.9 to 15.8. When the market's screaming, it looks weird. Great job. Perfect, Wayne. Awesome execution. Weird markers, but awesome execution. Chili dog. That's everything. It just didn't work. Wayne, I mean, that's everything, right? That's your momentum. That's the back of the bar clearing. That's momentum. Yeah, it's a good loss. I like that you recognize that. I like that you recognize it's a good loss. It's all the rules being met. Weak top. Odds favorable after this hiccup. Still clear. Oh, Alessandro, start posting pictures, man. We'll get you where you want to be. All right, so Better Dad, I want to go back to a real basic lesson. And this is going to help you a lot. It really will. When we talk about odds favorable momentum, it's really important that the large triggers are wide. There's no momentum in flat triggers. There's no momentum in triggers that are wedged together. It's that wide that lets you know that things are screaming. And here, you've got nothing. You've got small triggers, but it's a rough look. It's not there yet. It's not the best one. Yeah. I mean, everything says down, small's below the large. You're kind of anticipating the turn. But until you get it, the likelihood of a bigger retracement is there, and that's exactly what they did to you. Is they gave you that higher retracement, high ticked you, which is just rude, to be honest with you. And you said, wait a minute, it is the right trade. And I like that you got back into it. With this look, this is almost your better entry, or that well, you got a confirmation bar there. That's just a wonky look, but I think that you're absolutely right. Your head's in the game. You're following the large chart. It's just without that immediate, that odds favorable momentum, it's a little more difficult for that to create the expectation that the market's just going to bounce and rail. This is where we get a little more wiggle, if that makes sense. Great stuff. Great stuff. All right, let's see. Bum, 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 bum. Lonnie, if you're watching this later, we're going to take a look, and I'm going to do it. Strong triggers here. You see them starting to return. The trend is weakening a little bit, but not quite. You do have the potential to break. You get in at the area inside of triggers. And then, guys, you see the second divergence? One divergence is pretty bad. Two divergences is pretty detrimental. So if you're taking these 50-50 looks, these not quite broken looks, keep an eye on divergence. It can really spoil the good time. Good stuff, Lonnie. I'll send him a message later. All right. Weak bottom, odds favorable. Now a clear path after large clears with room up. We're starting to lose a little momentum. Two ticks above the area inside. I love it. It takes three divergences to kill it. And you're out break even. I love it. You're following a plan, Better Dad. You are following a plan. And it's paying dividends. Nicely done. Nicely done. I mean, just strict to the KISS plan. And then you're going to find a way to do it differently eventually. You're going to find a way to manage a little more assertively. And you're going to get there. Learn them like a scholar, break them like an artist, right? All right. Bob says, I missed this trade sitting out with news at 8:30 a.m., but it's a good trade setup. Take care, Alexandra. So weak bottom, odds favorable, not even close to a clear path. Bob says this is where my money is made. All right, Bob, I'm not going to argue with you. I love it. Potential of 900. Doesn't say anything about the potential of that area to stop the market. So, Bob, I just want to go back and look at something real quick. Hold on. I'm going to go to crude. I just want to see something real quick. Trading into a termination kills you. Kills you. Even with odds favorable. Kills you. Only the potential to break doesn't. Odds favorable doesn't. Odds favorable doesn't. Odds favorable doesn't. Odds favorable doesn't. Doesn't. Odds favorable doesn't. Odds favorable doesn't. Weak doesn't. Odds favorable, big bounce. So the only thing I'm saying is that it would appear more often than not, trading in determination conditions. Hold it. There's one that won. There's one into a termination that won. That was too big of a retracement. Way on the wrong side of everything. Would have stopped you out. So one of the things that I try to really, there was only the potential to break. That one won. But I really try to drill into your head, guys. Oh, there's one right there. Directly into a termination, but that one won. When you show me pictures repeatedly trading into termination conditions, especially from a bad bottom, I'm going to tell you that you're taking a pattern that loses more than it wins. And there's zero doubt in my mind about that. Rule number 2 isn't because of the one time that the area breaks, so we're like, oh, we have to have a rule that has us trading into it. It's the 36 times that you take a loser into a termination condition. It's the 36 times. These are avoidable losses, and every now and then, guys, it's going to break. Every now and then, it's going to break, it's going to run, and you're going to say, holy shit, this is my trade. What a great trade. So, throw that out there. Forgive me if it seems preachy. Bob, do whatever you want. Stop trading into terms. I'm not telling you don't trade into termination conditions. I'm telling you it's going to lose more than it wins. That I'm sure of because I've studied it. I've got 30,000 pictures in my arsenal that say that that is a recipe for disaster. I've got an entire section here that says it's a recipe for disaster. And when I take a trade, when I'm risking my money, I want an advantage, guys. I want an edge. And Bob, trading into an area, I'm not telling you don't do it. If you said, look at this, Mark, I've got odds favorable. I know it's not a clear path, but look, I have strong triggers and I have no divergence. I could say, Bob, you're making a rational decision, willing to risk it. And then once divergence prints from a fib, your advantage is gone. And the fact that it went up is luck. Because divergence from a fib is man, that's bad. Especially a fib that hasn't broken on the large chart. This is the small crowd telling you, we're fighting here. We're stealing momentum here. All your triggers are below. Good luck. And if it breaks, I think luck is the word. But again, you do you, man. It's not my job to ever tell you guys how to trade. It's not my job to ever say you're doing it right or wrong. It's my job to point out when you're making decisions that aren't consistent with a high probability of success, and then you making the decision whether or not you want to do it. Chili dog fail. Again, perfect look. I think you're giving up a little bit more than you need to on your chili dogs, Wayne. I love the look. Love the look. And you moved your stop. I think just the close on the wrong side for me. Great look though. Awesome following of rules. 100%. And this is forever going to be one of my favorite pictures. Favorable large triggers, guys. 2 snakes riding piggyback. I love that. All right, weak top, nothing through. You take the long, you got paid, out break even. We saw that one. And then it comes down, odds favorable, clear path. You don't take the first one, that's okay. You go to take the second one and it just didn't work. And man, it's right. It's a pullback to an area inside of triggers and the stop makes sense and it just didn't work. Great look. Wasn't complete through on the first pullback. Nope, 50-50, and it's okay to not take that one, so that's totally cool. And then Paul, thank you for saying that. Guys, every market has its own personality. They really do. S&P and crude oil are pretty well behaved. Gold is that redhead you dated in high school that stuck a knife in your leg, tried to hit you with her pickup truck. NASDAQ is her angry older sister. You'll learn the personalities. I love that. Better Dad, stay focused. You're killing it. Because you know that one day you might choose to take those, but you don't have to right now. So I like that you're staying focused. Tried the chili dog, but it moved too fast to calculate, so momentum trade. Everything says go, and Wayne goes. And I love it because you get that down bar, up bar, and then you're in on the way up. Seller's already failed. Beautiful trade, Wayne. Really nice. Taking advantage of momentum and a clear path and just getting paid. That's the goal. Fun stuff. Better Dad again. I love how busy you are. Strong top. Odds favorable. Clear path. Got in late. Made 100 and break even. So, all right, Better Dad. And Paul, you're right. It's all you need. Check it out. Quick little lesson here. 2 ticks below is to catch it on the way up. If it's already gone up, passed through, the area didn't create a bounce. You might have dodged a bullet. So catching it on the way down, it doesn't matter if it's 2 ticks below or not. And then money, and then break even. I like it. Either way, 2 ticks below might have stopped you out on the first one. So this actually saved your bacon a little bit on the confirmation. Nicely done. That's the kind of luck. Take the right trade and accidentally avoid a loser and get it. That's the kind of luck we want because it's still the right trade. Boaz. Strong bottom. Odds favorable. Clear path. Late entry. But good stop placement keeps you in, and you ride that momentum all the way up to the fibs. Very nice. Very nice. Near those fibs, you're waiting for confirmation. Near what fibs? Near what fibs, Better Dad? You're treading water in the middle of the Atlantic here. So, hold on. I just want to make sure I get this. This fib, 8 points away from your entry is making you fearful. Or is it this fib, 3 points above the trigger lines, that's already been cleared for 1, 2, 3, 4, 5, 6 bars. This one made you fearful? Better Dad, that one's in the rear view mirror. So watch this. Better Dad, what part of your rules say change your approach? Now, if you had said, Mark, the mid-band is outside of the trigger lines, right? Better Dad, your large chart is perfect. When your large chart looks like this, nothing on this chart should invoke fear. You have the best momentum ever, and there's nothing in the way, and you're past everything. Better Dad, this is you. In this picture, I'm going to show you. Ha ha. That's you. That's the large chart. That's the best of the best. That is the greatest large chart look you could ever have. Now, that's okay. Your midband is on the wrong side of triggers. So waiting for confirmation because your areas are on the wrong side of triggers all day long. And I think that's what you did. And there's a lot of moving parts. Does that make sense? The large chart is as sexy as a large chart could ever be. The small chart doesn't have the perfect entry. Let me wait for confirmation. I love it. That's actually awesome. Everything about it. Great job. You got kids all over the place there. Well, you are the better dad. So no problem. Great stuff. And Boaz, great stuff. You're doing great. How many kiddos you got? You don't have to answer. You don't ever have to put your personal out here. I've got 2 though. And they're amazing. Taking yours to school in 5 minutes, Paul? You guys are on opposite sides of the state from each other, too, but they're savages. They probably get it from their mother, don't they? I know mine did. Paul, strong bottom. Getting towards momentum. No divergence. Perfect entry. Came real close on the stop. Perfect trade, Paul. Nicely done. Twins will overrun the system quick. They may. Great trend trade, Paul. Coming from that strong bottom. Beautiful. I remember I went to college with a newborn and a autistic 6-year-old. It's hard to learn with distractions. All right, strong bottom. Love it. Odds favorable here, but fading. Getting there. Not my best. Got issues in retrospect. So we got the tail into momentum, directly into a termination. There's your entry. Stop doesn't really make sense. Who was this? Was this you, Better Dad? So you adjusted rule number 2. You adjusted rule number 1. You adjusted the stops, but you won. Got lucky, bad reading, not patient, let it come to me. There you go. It's okay. But you know what's cool? And I got to throw this out there. Is that you didn't say, yay, I won. You said, I broke the rules and won. And that's okay. It's not even a loser. And this is one of those things where you're into the termination. Confirmation helps, I think, instead of huge stops. Confirmation instead of huge stops really goes a long way sometimes. It's not a horrible read, but I know that you're trying to stick to the high probability trend trade. So of course, I'm gonna go back to those rules, and you know that you didn't quite follow it. All right, Morgan, strong bottom, odds favorable, termination, no divergence. You take it anyway and got punished instantly. So Morgan, you're saying that even from a strong bottom, even with odds favorable momentum, you knew exactly where the market may reverse. You took a shot. Didn't work. Hopium. Don't smoke hopium, kids. And Bob B, the man, forgive me. But this is why I always point out when you're trading into terminations, because that's the best momentum ever from a strong bottom. You could take it on crude oil. Really? You can trade into termination conditions with momentum on crude oil. I think we did that one with Bob, and it was 72 flavors of ass kicking, Morgan. You're saying you get lucky more often on crude oil. Does that make sense, Morgan? Guys, I'm not trying to beat you up, but the whole reason rule number 2 came to be is because John Novak one day put his chart at 30 days back and took a picture of every time the rules for a termination condition was true. And when he was done, when everything was said and done, guys, John Novak took 10,000 pictures. And even if it was 50,001 lost, that pattern is not an advantage. That pattern loses more than it wins. And I'm telling you, that's how your rules came to be. And it's probably more like, honestly, it's probably more like 80,000 of them lost. But 20,000 times it won. So Morgan, let me sing a praise. Morgan didn't have divergence. He thought he'd take a shot. With all of this momentum and no divergence, maybe it'll go retest the area. But Morgan, there's one thing missing from this small chart. Do you see it? You don't have divergence, but you also don't have momentum. So your small chart's telling you that even though the large chart is cranking, you're already losing that advantage over here. Does that make sense? So if you're going to take a shot, force your small chart to be perfect. And Bob, that went back to yours too. Your first entry on that last long was beautiful. But when that divergence printed from a fib, you have to believe that it's more likely to go down than up. Great job, Morgan. Great lesson in there, dude. But that's the subtle little something something that new users aren't going to see. That's the subtle little something something that when you post it in the room, I'm going to identify it. I'm going to talk about it. I'm going to see it. I'm going to point it out. I would, Bob, but what I do doesn't mean anything, right? Let's not even talk about divergence close the trade. Let's talk about... Hold on. Let me see if I can find it. Did I lose it? There it is. Check it out, Bob. No. Odds favorable. Cranking. Love it. Odds favorable. No divergence. Man, if you're going to take a shot at trading into a fib, this is the best look ever. And then what happens, Bob? It tries to go up and fails. And it tries to go up and it fails with a loss of momentum. Your small chart is saying, dude, Bob, we're trying, man. It can't go. This divergence says that the sellers are fighting right at the key area. This 1, 2, 3 failures says the sellers are fighting right at the area. And you had no idea there was some Yahoo with his uncle's money right here ready to unload. Does that make sense? I love it. I love your first entry. I think this, for anybody, should be an exit condition. And then, Bob, here's the thing, man. If they get back above and that momentum is screaming the way it was, ride the momentum, right? Get to the other side of trouble and look to finish off your trade. Does that make sense? So I'll give you options. Why not? Great stuff though, Bob. Great lessons. You guys are amazing with all these lessons. All right, Ed. Refusing to tell me why. Everything says down, potential to break, pull back to resistance inside of triggers. Missed it. Why? Ed. Why did you miss it? Because the rules say your entry comes from 88. Your stops go up here behind this reversal bar, and it's the easiest trade ever. But you decided that they had to get you at an HVA line, which has nothing to do with a high probability trend trade or a medium probability trade. Simplicity. Simplicity. You would have caught it, you would have made money. So there's the first one. And then it pulls back, and you're absolutely right. You're on the wrong side of everything. That should scare you. Because you don't have momentum. The trend has changed. But everything says down on the large chart, Ed, that's where a confirmation bar, if you're going to take a shot with the best momentum ever and all the triggers below, that's where you use this chart. That's where this chart says, go, Ed, go, go, go. There's a signal. There's virtually no risk. We're coming from the fib. And then it runs down. Easy peasy. So one of the things, and Ed, I don't know if you're listening or if you're already frustrated and gone for the day. If you would just write odds favorable momentum, yes. Clear path, yes. And then, Ed, this is the part that you have to get. Entry sucks. Nothing inside of triggers. So because of the large chart advantages, will force the market to give me confirmation. So, Ed, your confirmation is the reversal bar. Your confirmation is the market flow signal. But if you go into it and you say to yourself, this chart is so kick-ass, all I'm doing is looking for an entry, you'll start believing the large chart. So back it up one. All I'm going to do is write rules on the chart because you won't. Odds favorable momentum? Yes. Clear path? No. But it has the potential to break. And what does that mean? Might need to manage. That's it. That's all it means, is you might need to manage. Or mange. Entry is freaking perfect on the small chart. No need to look to market flow for confirmation. No need to get a reversal bar. Just go with that momentum. If something changes, I'll manage. So what happens is if you always talk about what's good on the large chart, if you always talk about the advantages on the large chart, if you say to yourself, it's hard to stop this stuff, you're more inclined to follow the rules. But if you're making up your rules as you go along based on your emotions, it becomes problematic. So here, if you go through it, I have weakness. I made it to the fib. I don't have anything that says down. Why would I take the trade? Does that make sense, Ed? I don't have strength. I don't have a clear path. Why would I take the entry? Well, because you missed the good ones. You missed the easy ones. And I'm gonna say it again. And guys, I do this. If you're struggling with consistency, if you're finding yourself in a position where you're not winning more than you're losing, if you feel like, it's just too much, and that's okay, Ed, 2 charts is all it takes. And start speaking out loud. Do I have momentum? Nope. Do I have a clear path? Nope. Do I have areas inside of triggers? Nope. Why the hell am I going short? And you'll start saying that if you talk about your advantages every time. John Novak, what's up, big brother? By the way, we're doing some limited beta testing on the funding business. We have 3 major parts to finish, stats being 1, a few behind the scenes big things. But if you wish to load it up and play trading on Trading View only, can watch your ninja charts, then please feel free and report back to John via DM any issue. Not tech question, please. Issues. Tech questions will go to tech support. Guys, if you want to be a part of the funding company taking off, helping us get stats, John, throw the video in there that teaches them how to do it. You can go through and you can sign up. And guys, you can run through and get copiers and blow accounts and all sorts of stuff. Let me find you that real quick. That was an incomplete thought. There it is. John got it. So guys, there's your instructions. Knock it out. Have some fun. Ed, I'm telling you, you read charts better than everybody. You are such an awesome chart reader, but you let your emotions dictate your trades instead of rules. I just dropped the KISS plan back in there. And I'm going to tell you guys from experience, if you can find it in your heart to follow this plan for 5 days, that's all it takes. 5 days, follow the checklists for both of them. It's going to restore all sorts of confidence. It really will. So Ed, something to think about. You don't have to, but something to think about. Better Dad, we looked at that one. Paul says termination, potential to break, and because of the divergence, Paul says I'll get in at the highest point, not the lowest point, because I want my risk to be minimal. His great entry still gives him first target and the opportunity to get down on a potential trade. Nice trade, Paul. Good stuff. Josh. I love that you're trading copper. Better Dad, you're a bad influence. Or you're a good influence. That's 2 people now on copper. Is it good, Josh? Better Dad? Bob, or was it Bob doing copper as well? Is it good? Is it smooth? Better Dad says meh. Faster than Cruden. All right. So the patterns work, right? Momentum. Potential to break. Perfect entry. Maybe stops need to be a little bigger. Does it overrun a lot? I've seen a couple where it seems to overrun. I don't know how you gauge 5 ticks on this one, to be honest with you. Because that looks like 15 ticks. Yeah, I don't know how to gauge it. But yeah, it works. Momentum and path. This is what I would look for. How many times does it overrun? Yeah, so I've got 20 ticks between 60 and 40, right? So 5 ticks would put me right here. That doesn't feel like enough on this market, just from what I'm looking at. How much is a tick worth? Okay, so it's good money. This is what I'd watch. So anytime I get to a new market, anytime I decide to go from one market to the other, I go back and I start circling tails, and I see is run over a real thing, and if it is, maybe you wait for confirmation bars. I know a lot of people that will trend trade gold, but because of its tendency to overrun, almost all of their entries are on the way up, not the way down, and it's just a little modification. Good stuff, Josh. Great trade. Miss Trina, here we go. Strong top, no triggers through. Odds favorable, wide triggers, clear path, pull back to the mid band and the retracement zone. Stop where the market shouldn't go. Stop gets lowered once the reversal bar hits. First target hit, second target hit. Miss Trina, it's perfect. Can I ask you, are you doing this live market yet? And then Wayne just said it. That's why he uses the buy or sell market entries on gold, because of its tendency to run over. That says playback, Trina. You did this live? Great job. Was that the first one without pausing, though? Getting that feel of the speed? I love that. How does it feel when you don't pause? You know your patterns. You know your rules. You know where entries come from. It's almost like calling your shots, though, isn't it? Because right here, Trina, you're going, I know right where my limit order goes if I get a reversal bar. That's the cool thing about all the study that you've done. It will slow the market down for you. It's pretty cool how that happens. Great job. Nice work. It is a little scary. Wayne, we'll call that a termination. Odds favorable, potential to break, perfect pullback right to support inside of triggers, easy money at the trouble spot, and you're going to just follow that reversal bar because it's not high probability. Dude, this is gorgeous. Great, great trade. Rock star solid. Everything about it. Nicely done, Wayne. There's all the pictures. John Novak says, check it out, guys. The fibs hold. The triggers roll. Broke your rules, Novak. After a termination condition, small triggers roll. You can buy the pullback to the triggers. That's a 2004 edge trade. And then what John will do, or what he's showing you guys, is you can execute trades for those funding accounts. But you can trade your plan via Ninja. Just do the execution. Pete does that a lot. Pete's got a program that forces him to use a different platform for entry, but he'll do his analysis on Ninja, and that's exactly what John's showing. You took that same trade yesterday, and let me show you guys. This is pretty cool. So this particular trade, termination condition holds, small triggers roll, pull back to the small triggers. It's interesting. John's like an elephant. He doesn't forget. So John started teaching this particular trade in 2004. John Novak, back before, that might have been before there was an actual room where he had to send out emails with PDF files to teach you how to trade. If a termination condition holds and the small triggers roll, sell the pullback. This has been going on forever. And he's still using it. Pretty cool, right? One from the guru, ladies and gentlemen. One from the guru. What's the live market doing? Crude oil directly into a termination condition and a big bounce. Pretty cool. I'm going to try to reload that. Hey, Better Dad, great trading today. Awesome job. Great annotations. Incredible participation. Thank you for being here. I love that you're 9 days in and Simplicity's already getting it done for you. Guys, if your charts ever look like this, reload your historical data. That's what I'm doing right now. It's reloading tick replay. We're going to see if it fixes it. We've got about 30 minutes left. What do you guys want to talk about? What can I do for you? Better Dad, your easy trading computer isn't going to limit slippage. Slippage isn't a product of your computer. It's the speed of the market. It really is. It's the speed of the market that slips. Now you'll load faster, it'll run smoother, you can do more drawing quicker with less problems. But yeah, slippage is a byproduct of the market moving so fast. It will be better. So when I built this computer, John Novak sent me the parts to build this one. And then the crazy guy trusted me to build it. I went from, and I wish I still had the thing. So there's this program that tests your computer, and you're either like a lead sled or a battleship or UFO means like it's the craziest, best ever. I could launch rockets with this thing now, and it's nice. And then John says, once our browser platform is done, then you'll have Nexgen on funding that will be just like NinjaTrader. They are slow, but we have seen it, and we should be completed in a month or so, give or take. So Nexgen's browser version, I'm excited about this one because it means that I get to grab my iPad and go play 18 holes and still have the ability to trade my plan out on the golf course when I'm done teaching the class. Of course, I'll probably be busy with the funding company. Pretty cool. Guys, so much big stuff coming. So much exciting stuff coming. I hope you're as excited as I am about it. I know John Novak's ready for it to be here. Hardest working man I've ever met. Or on the Monsters of Rock cruise. I'm going with you, Jeffrey. I've got a buddy that tattoos on the rock cruises, the 80s cruises, stuff like that. He actually tattoos on those ships. It's pretty cool. And I was like, dude, how did you get that gig? How do I get that gig? He's a legend in the industry though, so he gets to do it. Wouldn't that be awesome? Bikinis and ink. Yeah, a bunch of people ruining my hard work with the sun and the water is what it would be. Kills the artist in me, but that would be fun. It's like tattooing at conventions or Harley rallies. It's always a good time. People are always excited to get tattooed at those places. Man, that's slow loading. Slow loading. Yeah, life is amazing. I agree 100%. Get that off there. See if it helps. We've got 25 minutes. Look at that. 3 divergences in the same price range. And it's still calculating. We'll see what it does. What can I do for you? Who's got a question? Who's got a comment? Who's got a picture? All good. Miss Claire, you showed up. Long time no see. Hope you're doing well. Hamid, I'm waiting for you to post in the room. Goals met. Going home. Rick and Roll, how you doing? Wayne Yu, what's new? Steve Matthews, how's it going? A lot of people think that this room's only for new people. Ugh, root canal. A lot of people think, well, I'm not new anymore. I shouldn't post in the room. Guys, I want you to. I want you to post in the room. I want you to ask for help. There's always something to learn. I learn something every day. Every day. Every day I talk with John Novak. We talk for hours on end about patterns, about entries, about management, about exits. Always looking for a way to do it better. He's happy but never satisfied. That's kind of the cornerstone of what he does. Always looking for a way to do it better. And I'm the exact opposite. I'm always looking for a way to do it easier. So when our brains combine, it's pretty amazing, I think. Look at that. Termination condition worked, didn't it? How many times do you have to lose money into a termination condition before you believe it? And this is one of those moments where if it feels like the preacher's talking directly to you, he probably is. How many times do you have to trade into a termination condition and lose before you stop doing it? My answer was like 18 million, I think, before it finally sunk in. And I don't even know that it's completely sunk in. I still break that rule every now and then because I get that little hope monster in me. That little, man, it should. It's likely. Maybe that's just me. Oh, we're slowing down. John, are you still in here? Can they ask you questions about funding? No? All right. Lenny, good to see your puppy dog face in here. Zahir's hanging out. Marky Mark. Sans the Funky Bunch. I notice you guys when you come in. You know that, right? Miss Donna, you type something in my room every day and delete it. I see that. I hope you're not skipping questions. Joel Beal's in here. Taking a minute from trading zones and riding Harleys. I love it. It's a little community, isn't it? It's kind of fun. Uh-oh. Here goes John. John's posting. Not going long. No easy longs. He says, will term hold? TV says yes. Learning to put the two together is pretty cool. There was one of John's shorts. There was, no, that wasn't one of his longs. No divergence. I even know John's plan. That's all right. Throw it in here, John. We're running out of stuff to talk about. Nobody's posting. Wayne, that looks miserable. I hate dental work. I've had so many bad experiences at the dentist. I hate going to the dentist. I will, but gosh, I hate it. I'd rather go fight pit bulls wearing a bacon suit. It's not a fan. Go fix a flat. Have a good one, Jeffrey Dean. Always appreciate you being here. They're using CAT scans too. It's pretty cool how they do it these days. It's different. It's different. And mouth pain is the worst. Oh, Lenny's gonna post. All right, so let's see. The first trade, Lenny, you had odds favorable momentum and everything set up, and it was a pretty easy win. And then the second trade, you had odds favorable momentum and everything set up, and wasn't much going on there. So let's see, pivot point on large chart and small term short. Exit at divergence on the range chart. Hey Lenny, you didn't exit at divergence. You exited 4 ticks above divergence, right? You never gave it a chance to get there. But I like it. You have the termination, the triggers start to roll, the smalls get below the large, you had the HVA line, and you say, all right, let's give it a shot. I believe in terminations. And then you just chickened out before you got to the divergence line. And that's okay. That's $80, right? Your account doesn't know how you got to that 180. It just knows that you're 180 in the good. Nicely done, Lenny. And the patience of getting to the other side. That's what helps, guys, because you already had the divergence. You're below the large triggers, the smaller below the large. Your range chart gave you divergence. And right here where those fast triggers roll, that's where your advantage starts setting up, Lenny. And you knew it wasn't high probability, so you started cranking down. Mike, you can't use Nexgen on your phone yet because Nexgen requires a platform to run. But once the browser version is there, you will be able to run it on your phone, which is pretty cool. Like I can run trading view charts on my phone, but we're not there yet. Getting close. I don't have the eyes to trade on the phone. Where are you going, Wayne? Are you on the plane now, or are you just showing pretty pictures? And that is not a commercial window. Flying the other day? You fly too? That's awesome. Oh, very cool. All right, Cav. Termination. Everything rolls. Strong triggers. You got stopped out of a long. I don't know where that came from. And then you take just giddy up. No reason to exit till it closes on the other side. Nice job. Great job. We have a lot of pilots in the family. A lot of my mom's side. The men were all pilots. My grandfather, my uncles. Pilots are nuts. One of our uncles was a fighter pilot. And I had the misfortune of riding in a Cessna with him. Almost threw up. Scared the ever-loving bejeez. Lenny, everything says up again. But you hit that termination. You get your first divergence. This one's a little more aggressive. You didn't really give it a chance to roll. Just a quick little snippet, Lenny. That one's a little more aggressive. This is a strong trending market that has been absolutely railing up. And you want to be the first one in. I like something to change. After a strong trending market, take care, Cav. My brother used to always say when he taught the room, and you don't have to do this, you guys do whatever you want. But when the market has been strong trending, he used to say absolutely no shorts until the large triggers roll. Because with this much strength and that constant push, it's still more likely to go up than down. It takes a while to hit the brakes on something that strong. So a little aggressive, definitely. I'm glad it worked. I'm always glad when it works for you guys. Crude oil is stuck, aren't they? S&P broke out. Oh, that's where Cav made his money. Easy money. Now we're into the termination. Now the triggers are weak. Now divergence is printed. Lenny went long right here. He got out at the mid band. Did you do it, Lenny? Yep. You never even post in here. I know your charts. Look at that, guys. Weak triggers at a term. Look what the market just did. Holy smokes. Somebody knew about that spot. Somebody knew about that fib other than you. And then odds favorable directly into a term. There's that divergence from a mid-band we talked about. You guys remember that one? And it pushes way below and way outside of the triggers. There's a second divergence from the exact same mid-band. It might break. It might not. So watch this. Let's do the, if I were a gambling man, and guys, I don't condone gambling. Just looking at the trigger lines, which of these areas is more likely to hold? Let's go to a super basic chart read. If all you're looking at is the trigger lines, which of those areas would you say is more likely to hold? Which one is more likely to break? You're absolutely right. With all that momentum and everything up, this one is more likely to break. That one is more likely to hold. What does that mean? It means that I'll take shorts off the table. And if I'm going to take a chance, I'm going to take a chance in the direction of the good stuff. That's it. That's just a chart read. Doesn't mean that there was a trade. 3 divergences in the same price range. No areas inside of triggers. All the rules. So if you were feeling left out and decided to go long anyway, you probably just lost. They woke up though, didn't they? Good stuff. You guys are going to have to go play day trader this afternoon. Take some pictures. Bring them to me. Follow rules. Price reaches Fibonacci support. Large triggers are above the reversal bar marker. Should we see if they close the gap to the large triggers like they often do? They might not. Yeah, I agree, Wayne. Odds favorable, odds favorable, odds favorable. Nothing in the way. That would have been a great chili dog. Good stuff. Lenny, there it is. Everything's screaming north. Lenny says, let me get above a fib. Let me get some money. Let me chicken out. Let me get back in. Let me get back out. All right, Lenny. Can I give you a lesson that you might not have gotten in here yet? Because it pertains to what we see here. So, Lenny, if you're just going to jump the fudge in, and you did it, why? Because of momentum. Because momentum was amazing on both charts. Because momentum was outstanding. Because there's nothing in the way. Right, Lenny? Did I read that wrong? Yeah. So check it out. You're going to love this. Until price closes on the wrong side of those small triggers, Lenny, it's going up. I don't even have to wonder if it's going to. It's going up until there's a close on the wrong side of the triggers. Hold on, let me back it up. It's going down until there's a close on the wrong side. So Lenny, something that you can think about when you take these heart-wrenching, adrenaline-producing, sweaty palms just jumping in trades is you can say, you know what? I'm going to hold this one because there's no reason not to. And I'll trail my stop on a reversal bar marker because until it hits that reversal bar marker, it's going up. Does that make sense, Lenny? This is just one of those things. This is gospel truth. We did this once in the room. Well, neither of those are lending themselves to it, right? But that went up until it got below. And now we don't know what's going to happen. It went down until it got above. That's a good one. So I've seen people use that one where they're like, man, I think this area might break. Let me force a reversal bar. Let me force a close on the wrong side of the triggers. Otherwise, I'm just going to hold that trade. And then let's see. I'm going to put a sell stop. So watch this. I'm going to trail on the reversal bar marker. Just for grins. I'm not saying this is a trade, guys. But I'm going to trail on that reversal bar marker. And until it closes on the wrong side, I'm in this for the duration. Whoop. Do it again. Every up bar is one tick better. We did this once in class, and I think it turned out to be like a $700 trade. We caught it on a run. So let's see. Isn't this pretty cool? There it goes again. Let's give it another tick. And we're just going to follow it. Every time there's an up bar, we move our stop. Whoa, that was fast. And there's our close on the wrong side. Isn't that awesome? And how do you increase the likelihood that it's going to run? You make sure there's nothing in the way. You make sure it's a clear path. But holy smokes, that was like an arbitrary jump in. And no reason to exit. These are the little things that you're going to pick up along the way. I teach the basics. I really do. But guys, there's trades that say when everything is screaming down like that, get below trouble, jump in, and wait until it closes on the wrong side. That's that chili dog. But look at that. I didn't have to give it all back hoping. And then if it's at an area, you could tighten it up even more. But I think that's a pretty good lesson. So Lenny, if that adds an extra $50 every day, that's kind of a nice addition. Guys, remember when I said that exits are taken when your advantage goes away? If your advantage is momentum, that's your indication that momentum has gone away. It's really that simple. Glad you jumped in, Lenny. That's a good lesson for everybody. All right, so I'm